legislation to come into play, and some of the new requirements of Biggert Waters that are being implemented gradually that will impact your community means significant rate increases, newer and more technically accurate flood mapping updates. The Home Owners Affordability Act slows down these increases, but it does not, and I want to emphasize that, does not avoid them altogether. It basically just takes some of the original triggers, some of the original thinking of Biggert Waters and kind of slows the train down, to use a good analogy. FEMA has determined basically that the only way to avoid some of these increases is for businesses and residents in Florida, especially in coastal areas, is for their local governments to actively participate in the CRS. Now, that's how the system is organized. It's not something where businesses and residents can automatically sign up for these discounts or impact the process. It has to work through the governmental structure, and that is why local governments, counties, cities are involved in this dialogue and discussion. It's something that you have to do on behalf of your businesses and residents. If I can get the next slide here. Not changing. Hang on just a second. Okay, now we got it. Okay. All right, just a quick overview of the system at 10,000 feet, just a few points that are important to keep in mind in this discussion so that you understand it a little bit better, is that as of October of 2013, there were about 5.5 million residential and commercial policies in force in the National Flood Insurance Program. Basically, that represented about $1.28 trillion in coverages in terms of liabilities, and about $3.8 billion in annual premiums coming in to cover those potential activities or losses or coverages in the program. Of those, basically Florida were nearly 2 million policies alone. So we have a huge stake in the National Flood Insurance Program. We are by far, I think, the largest shareholder in the process. Some 36% of the entire risk pool, insurance pool of that $1.28 trillion is represented by Florida. That basically breaks down to 21,600 communities throughout the 50 states and 6 U.S. territories that participate in the National Flood Insurance Program. And basically, so that you understand, to qualify for the National Flood Insurance Program, a community basically adopts and enforces a floodplain management ordinance to regulate development in the flood hazard areas. And the distinction here that I wanted to draw early on, and Danny will get into the details of this soon, as he is a very thorough expert on the subject, is that the CRS program is a step above the NFIP. So the National Flood Insurance Program, the NFIP, is kind of the entrance to the party. But if you want to take it to the next level, if you want to have some of these discounts, basically you need to be a participant in the CRS. The main goal of the National Flood Insurance Program is to speed recovery and to help flood victims get back on their feet. I think you can look at the history of the program. I think you can see that it's been very, very effective. From 1978 to 2013, there was over 2 million losses reported, and those losses paid out a total of $50 billion, which went a very long way to helping communities and citizens and businesses get back on their feet. What's happening in the marketplace today, basically the flood insurance rates as mandated by Biggert Waters began rising on April 1st, 2015. They will be revised for new and existing policies. And of course, as I mentioned earlier, the Biggert Waters is the main driving legislation here, but the HIFA legislation kind of controls what percentages of increases can be passed along in the system, and that's what the purpose of HIPAA is to slow down the train just a little bit, but it doesn't avoid the increases. Increases in the rates will be for funding a reserve fund assessment. Again, remember that $24 billion number out there. Congress is trying to fill some of that hole in the bucket. There's an annual federal surcharge fee, and this will be charged on all new and renewed policies, and just general rate increases overall, and an additional new deductible option which offers far less coverage if you decide to go with that option. Generally, as I stated, HIPAA limits the individual increases. This is where HIPAA comes in, placing the basic premiums rise, the rate of rising kind of caps it or limits it. HIPAA limits individual increases to about 18% of premium and limits increases for average rate classes to 15%. But again, those are just guidelines. Everybody's situation is different, and you need to pay attention to your particular circumstances. I did mention an additional deductible option that was authorized under the new law. This is it. If you basically opt for a $10,000 deductible for your building and contents for single-family dwellings, you can get a huge discount on your flood insurance rate. So basically, if you have resources to go with less coverage, you can receive some of the discounts available for going with that. One other note that I just wanted to pass along, because it always comes up from time to time, is that grandfathering does remain a potential cost-saving option for some policyholders when you change mapping zones, and Danny can get into the details of that later on. Is that if, say, you go from one class of risk to a higher class of risk, there is a potential for you to be grandfathered, and you need to be aware of that. Your citizens need to be aware of that, and there's a fact sheet on the FEMA website. We've got that marked for you here, floodsmart.gov, and you can go and see the limited circumstances which this category applies. One other further note I'd like to point out is that when we post the webinar to the site, there will be a FEMA fact sheet for a summary of some of the legislative impacts. If I've talked rapidly and gone quickly, and perhaps you want to go back and look at that, we are going to be posting some fact sheets on there, as well as some other information that will be helpful. And they're going to put up Danny's bio, which I think is a good read as well, because he is very, very seasoned and experienced in this particular arena. This is just a quick example of what's happening across the state of Florida. This is kind of an example of in a microcosm of what is happening, and some of the things that perhaps it's not happening in your community at the moment, but please consider this a possible future headline. I noted this when I was going through Ken Small's clips, that on January 21st there was an article about a flood zone mapping change meeting that happened in Sarasota, and there was a pretty large crowd come out for a meeting, for a public meeting of 150, and they went through what was happening with the flood map changes, because it basically threw people into higher risk categories, and some property owners weren't sure about what the impact was going to be. And I can tell you that it may prevent people from purchasing properties. It will impact them in terms of their investment. They will be looking at issues like this before they buy properties, and there will be more and more questions in the future about whether or not they can get flood insurance and at what cost. And so if this hasn't been an issue in the past, it could be a sign of times to come. And I'll just kind of leave you with the following quotes from the bottom of the article. It was talking about this particular individual who, fortunately, the particular property he was looking at didn't fall into the new zone, but he said he would maybe looking elsewhere for an investment, and he said, and I quote, "It's going to affect sellers and buyers." Wilson said, "It affects the value of property," and it's that quote at the end I want to emphasize. It affects the value of property. What do we rely on as local governments here in Florida but property values? And if you have a hard time making an investment or redeveloping an investment or can't build back an investment because of the flooding issues and the flood insurance access, that's going to become a very, very big deal in the future. And again, the full article is included in these handouts as part of the webinar. I'm a real big picture guy. You have to kind of spell it out for me. It makes it easier. You know, remember when I said it was about 36% of the entire National Flood Insurance Program was Florida's slice of the pie. Well, this is what it looks like graphically in 2012, which is the latest data we were able to find. You can see Florida sticking out there as one of the dark marine states, which means that we have a heavy concentration and need for flood insurance coverage, and this is a big issue for our entire state. If you want to break that down a little further, and of course I'm from North Florida, so it always used to offend me when North Florida wouldn't appear on the maps, but for illustration purposes only, not that North Florida is not included, because it is. The heaviest concentration in the state is in the central and southern portions of the state, and that's what this map illustrates. So again, these are things that we need to pay attention to as a state, as local governments, and we need to be in the leadership of finding solutions for these issues. In terms of looking ahead, the National Flood Insurance Program and any form of that program that I could foresee in the future will definitely be risk-based. I think no matter how the debate turns out in Congress, I think you can pretty much count on the fact that they're going to seek to balance risk rather than to provide or continue to provide these undue federal subsidies. We shall see how that all turns out, but if I were a betting man, I would look at rising rates being something that we're going to have to get used to in the future. The National Flood Insurance rate increases of 15 to 20% or more, again, cover reserve funds to bail out the system, surcharges, and the increased risk that the insurance companies and the people that provide these coverages see in terms of coastal development. The new flood mapping and associated changes will also be a primary driver of the system. It won't be just because the rates are increasing. It will be because FEMA and their partners are coming back in with technically more accurate tools to figure out where the floodplain is, and you're going to see places that was not included in floodplains automatically, or begin to jump into these categories as they look more and more for how to spread the risk. And there will be kind of a more regular cycle for this activity as mandated by the legislation every 5 years. Another driver of the system is mitigation. In other words, the best management practices in the BMPs that we can use to help lower or eliminate hazards. So there'll be this pressure to raise rates. There'll be pressure to gather more funds to provide the insurance, but at the same time there will be a push to also figure out how we can mitigate our exposure and find ways to balance the risk. CRS is primarily the main tool used for this purpose because, again, the discounts are being offered in the system because they don't want to pay out the losses. And so not only is that something key to remember, understand that that's a great opportunity for you and your community to keep in mind. Just a quick basic introduction to CRS. Again, this idea that mitigation can help us balance our risks and needs to be passed on through local governments. The CRS works on a point system, basically in 500-point increments. Class 10 means that you're basically receive no discount. That any community that's in the National Flood Insurance Program receives 0 discount or is a Class 10. But as you make efforts to document what you're doing in these categories, you can move up that scale in 500-point increments and earn 5% discount for every class that you move up. So a Class 9 would get a 5% discount passed along to their residents and businesses. A Class 8 gets a 10%, Class 7, 15%, and so on and so on. And you earn points by focusing on 4 areas: public information, mapping and regulations, flood damage reduction activities, and 4 warning and responses. So again, Danny will get into the details of this, but that's just kind of a quick and dirty overview of the areas that you need to focus on in terms of mitigation and earning discounts that you can be passing on to your residents and businesses. And again, that's going to impact your economic standing in terms of your ability to attract future investment and your ability to remain viable in terms of property values. Again, if you want to find out your community class rating, where are you on this scale, you can go to the FEMA website, and this is the reference where you can take a look at that. You basically will know whether you're a 9 or a 10 or whatever your rating is, and they keep that list out there. It renews on May 1st, so a new list is about to come out, and it basically runs through the following May. And there are 2 time frames where you can kind of get in on the action to change your fortunes in terms of your rating. And again, Danny can look that up and discuss that for you a little bit. There are many potential benefits for being part of the CRS. As I said, I believe that it will lower your potential barriers to development. Let's face it, there's enough barriers and obstacles and challenges to overcome out there. Something that you can have a little control over and help mitigate by your direct efforts, that's really something, so you want to pay attention to that. I would recommend as a practitioner to be successful in the CRS that you sit down and you look at what you're doing. Think of it as a system. Find out what makes your system tick. Follow a permit through and figure out how many people touch it and what they're doing, because a lot of times the documentation that goes into FEMA is written from one person's perspective. You may be doing many more things already as a city that you're not getting credit for just because it's not properly documented. And so I would encourage you to think of it in that way and begin to really hone in on improving your CRS rating. I would also encourage you to focus on mitigation efforts. What are we doing that we may not be documenting already? And for the smaller cities, this is something that I found out in going through this effort with Danny, is you may be able to piggyback some of the county's efforts. You may be able to get credit for some of the things that they're already doing, and you don't really have to spend resources to do those things. You just have to show the coordination between you and the county to get credit for those items. And again, the Department of Emergency Management is active in this system. They are very active with the Florida League trying to help us. And now I'm going to turn the program over to Danny Henson, who is the state coordinator for the Florida CRS initiative. Danny's an expert in this area and has forgotten more than I'll ever know. and he's been a great partner. And he is going to go into CRS, what it is, what it means, and how it can benefit you and your community, and what we can do as a league and what DEM can do as your partner to help you, because at the end of the day, we want to see CRS be successful, and we want to see as many discounts extended to Florida as possible.
Well, thank you, William. I appreciate the opportunity, and I appreciate the Florida League of Cities being able to host this and being able to facilitate the opportunity. The previous slide showed the website, the floridadisaster.org /mitigation/CRS. That's where you can go online and look at our website. Our website has benefits to the CRS, how do I get into the CRS, how do I participate. It even has a map that's interactive where you can actually select, you can zoom in and select a county, look at all the yellow dots, you'll see the different cities. They're not named, but once you hover your mouse over the dot, you'll see what city or what community it is, and you can determine what class and the percentage discount. So that's one item I'd show you right off the bat, that especially for the media. I don't know if there's any media on the GoToMeeting or not, but I always like to push that map in their website because it gives a lot of information that you'll need to know to go forward. Well, William's done a good job explaining a little bit about the National Flood Insurance Program. I think it is important to note, however, that the community rating system from here on out, we'll just call it the CRS, is a voluntary part. There are approximately 438 communities, I believe, that are actually participating in the National Flood Insurance Program. However, there's only 216 of those 400 plus communities that are actually participating in the CRS. So that means 47% roughly are participating in the CRS and the balance are not. So those policyholders in those communities are not receiving any kind of discount. William accurately described the increase in flood insurance. The subsidies are going away, the reserve fund increases, the policy fees, and then of course the rate increase. So all of this could be countered by your local community participating in the CRS. In talking over the years, and the CRS has been around for 25 years now. This is the 25th year, and the number one issue that seems to always come up is there's an administrative burden, and that administrative burden is someone within your community who probably wears multiple hats, is having to document what you're doing and completing some worksheets and being able to prove that what you're doing in your community is above and beyond the National Flood Insurance Program. And those are those activities that William showed in the previous slide that is divided up into 4 categories. So the CRS is a voluntary part. As I said, you don't have to participate in the CRS, but we've got 47% of our communities in Florida that are participating. And those, and the next slide will show you what exactly how many dollars we're saving the residents annually. And it's a nice number, but we want to see it much larger, and that's why we've got this initiative going on that I'll talk a little bit about. But the key here is, and if we're going to save residents money off their flood insurance premium, there's got to be a balance. There's got to be a counter. So we're looking for great floodplain management. What's the best way to secure better floodplain management so that losses go down, so it's compatible with the savings discount? So, for example, Florida, as of the last count I had, was saving $190 million, and this is real money. This is money that's not being collected by the National Flood Insurance Program that can be spent in your community. And it's only 45% of our 400 plus communities that are actually participating. That's $190 million annually, not being collected by the National Flood Insurance Program. So the NFIP is saying, okay, what are you doing for me if we're not collecting this money? And that's that better floodplain management that I was talking about earlier. You can look nationally and see that only 6% of the country is participating in the community rating system. There's roughly 1,330, I think, communities that are participating nationally, and we've got 216. So we are way far ahead of the national statistic. However, what's interesting to note is the balance of the 45% that's not participating equals over 200,000 policyholders. Now, when you consider we've got 2 million policyholders roughly in the state, and there's 200,000 of them that are not eligible for any kind of discount, that's more than several states in our country that have policies. So we've got a large number of policyholders that are not seeing any kind of discount that we want to reach, and that's why we've developed this community rating system initiative. So that's what we're after, and we'll talk a little bit more about that. Well, I think before we get into our initiative, we ought to at least tell you what the goals are of the CRS. And these are in the manual that you can find online, but I'll just briefly go over them. Obviously, we're hoping that communities who are implementing the CRS, they're trying to avoid flood damage. We're looking at insurable property, and we're trying to do the best we can to avoid flood damage. And there's a variety of regulations and a variety of different floodplain management steps that you can take. We're also hoping to support the insurance policies. As a matter of fact, the last stat that I had of 2013 showed that Florida lost roughly 35,000 flood insurance policies. Now, there's probably good reasons for that, but I'm concerned that even during the 2014 year, we lost double that amount. So what that does to us is it says a couple things to me. Number one is there's probably some residents who purchased a flood insurance policy because it was required as a federally backed mortgage if you're located in the floodplain, and perhaps those homeowners paid off their mortgage and they felt like, oh, well, I don't need a flood insurance policy anymore since I paid off my mortgage. Not thinking of the risk that the house is still probably located inside the special flood hazard area, but it's the fact that there's a mindset out there that unfortunately has been created that many think that I only need a flood insurance policy because I have a federally backed mortgage, when really the risk is still there whether you have paid off your policy or not. So you may have a liability on your hand if you have paid off your mortgage and eliminated your policy. And there's some other reasons. It could be that the flood zones have changed, and this is the very rare exception where a community is remapped and you end up with a smaller floodplain size than you did previous to the map change. That's very rare. Most of the time, the flood zones have expanded because of, as William said, better technologies, better study methodologies, and with LIDAR and some other advances, we're really able to see where the water is going to go to, especially with development. Every time there's some development, you've got a large shopping center or something where the surface is no longer pervious, you may have runoff, and that influences the special flood hazard area. So we're looking to avoid flood damage, increase support of the flood insurance, which doesn't necessarily mean you have to become a salesman for flood insurance. That's the last thing we want anyone to do. But there are so many opportunities to support flood insurance, such as some of the commercials you may have seen for the preferred risk policies where it talks about there's a 30-day waiting period before a flood policy is enacted. Most traditional homeowner policies do not cover flood insurance. So if you undertake some of the outreach activities that were listed in the CRS, that alone can offer you the opportunity to share this information, educate folks about flood insurance. So that's what we're talking about by strengthening and supporting the insurance aspects. The comprehensive floodplain management I kind of talked about, looking at the mitigation, looking at elevation. I don't know if the listeners are aware or not, but I think it's the 2017 Florida Building Code, which pretty much tracks the International Building Code, is going to have a 1-foot freeboard automatically included in those provisions. So for communities who currently have a 1-foot freeboard regulation where you require you require the base flood elevation to be 1 foot above what the FEMA elevation is, then you are affording your residents an extra level protection. And just as a side note, not part of the slides here, often I will show a slide that has example of a flood insurance rate before the basic rate, before any of the loadings, the reserve fund, any other loadings go on, that you'll see a 45% reduction in a flood insurance policy with 1 foot of freeboard. That's as good as a Class 1 CRS community. You can't beat that. So I realize there's an additional cost to elevating a structure to 1 foot when you're building it, but over a 30-year period or over the life of that home that you live there, that 1 foot of freeboard is going to provide you a measure of protection as well as a 45% reduction in the flood insurance policy. So that's huge to look at and consider when you're building a structure. Well, William said I would get into some of the details. I'm not going to explain each one of these activities. He broke down the activities by the 4 categories, and I'll just kind of look at just a couple in each one of those that I think will trigger an idea in your mind, or a light bulb should go off that you're already doing. And that's what is so key about our Florida CRS initiative. We're not going out looking at all these 19 activities, and within those activities there's 92 or 94 elements. That's not the plan here. We want to go in and look and see what you're already doing as a community. So for example, the fact that we have the Florida Building Code affords most residents close to 100 points already. Those 100 points get you towards that 500-point initial goal to get into CRS. So you're 20% of the way just by the fact that you're implementing and enforcing the Florida Building Code. Another opportunity for you is the elevation certificates, Activity 310. Every community in the state are, for the most part, are requiring the elevation certificate, especially now with this new legislation. In order to write a flood policy, you have to have an elevation certificate, or you cannot write a flood insurance policy. So every resident that's either building a home or purchasing a home in the floodplain with a federally backed mortgage is going to have one of your FEMA ECs, elevation certificates. And there's that 330 outreach project that's so easy. In fact, our state has produced 3 different what they call rack cards that has the 6 topics already on those that we've just distributed close to 3,500 of those last week at the Florida Floodplain Managers Association. We gave those out to over 200 communities that were participating. That's free publicity. You can set those up in 4 or 5 different locations in your community, and you can score anywhere from 50 to 150 points. So now we're talking about 250 points if you go to max, and we're already halfway to a class, and you haven't done anything yet on your own other than accepting free literature and maintaining these elevation certificates, which your community is already doing. Another activity I'd look at is Open Space 420. I would find it hard to believe that a community doesn't have some sort of open space, a park, conservation land, something along the line that you do not allow any kind of development because it's probably preserved in open space. Those afford tremendous credit points, up to 1,450 points. I mean, if you just have 20% of your floodplain preserved as open space, that will score you a great deal of points. Activity 440 talks a little bit about the GIS systems where you have overlays of the floodplain. The 610 activity talks about the county emergency management. The 540 activity, your drainage system maintenance. I don't know of any community that doesn't have some sort of drainage system maintenance program that can benefit you up to 200, 300 points. So all of these activities that I just listed are all probably being conducted in your community already, and that we could secure you close to or more than 500 points and get you into the CRS. So again, I'm not suggesting that you look at any of these or all of these 19 activities and think that you have to secure points in all of them. I can assure you, if you reach out to our staff, we can get you into CRS with very little effort at all. We've probably reached a dozen or more communities in the last few months with new staff that's hired on since January 1. And we're seeing our ranks of CRS communities grow by at least a dozen or more since January. So that's what we're after, and that's what we want to help you with, is to get into CRS without you having to do a lot of legwork. The next slide really talks a little bit about our CRS initiative and what is a good community. What are some effectiveness indicators that you may not know if you're not participating currently? What would you look at that might be a great hint that you're a good CRS community? Well, obviously, if you have repetitive loss, you're going to want to mitigate those, and the only mitigation you might be able to do is just provide them outreach. We're not saying you've got to solve the problem, but we're talking about looking at some of your repetitive loss. That we'll provide a list of those repetitive loss structures, and we'll even provide you some assistance on what could be done. Success stories, case-by-case analysis. Maybe you've got some open space areas that you don't allow any kind of development in. I've already talked about our state building code, the model ordinances. Most of you should be familiar with the local mitigation strategy, which is the multi-hazard plan, and there are points for that as well. We've got communities that are scoring well over 250 points for the local mitigation strategy, which is a requirement. It's a multi-hazard mitigation plan. It's what makes communities eligible for the various grants that are offered pre-disaster and post-disaster. So those are things, again, that you're doing that would make you a great applicant for the CRS. Okay, the CRS, the Florida CRS Initiative, this is something that we started. I want to put a plug in for our director for the Division of Emergency Management, Brian Kuhn. This was his idea along with the governor's office. Once they realized Biggert Waters, initially at the time just called Biggert Waters, was going to impact a large part of our state, William had a great map displaying the state as well as some of the counties that are going to be affected. Obviously, we know approximately how many subsidized policies there are because they're known many of them as pre-firm. What we don't know is when a community is remapped and those properties that were not in the special flood hazard area and now they're mapped in the special flood hazard area, there's no way to know how many of those properties will eventually turn up once all 67 counties are remapped. Those are the numbers that are kind of troubling, and we don't know exactly the impact that's going to have. So the only, and I want to emphasize this, the only way outside of you adopting a freeboard regulation to lower any kind of flood insurance premium increase is the community rating system. There isn't any other way that you can get around lowering or trying to soften the blow to those properties. Now, some of those properties that are being annexed into the special flood hazard area may not be at but below the BFE. They may be at the BFE. I've seen a number of articles. William had one up that he showed previously. I've seen several articles lately that the residents were panicking. They were panicking because they've just been advised that they have a loan, and the loan manager, there's a requirement they have to go through their portfolio business and determine, hey, do I have all the flood policies that I need on my portfolio business? And they can assign a flood insurance policy, or you can be proactive and you can find out for yourself what are my options. Am I eligible for a preferred risk policy? Or do I need to buy a standard X zone policy? Or do I need to buy an actual special flood hazard policy, whether it's in the A or the B zone? But the number one fact that is missing in many of these articles is the fact that some of these structures may have had a freeboard in the X zone regulation that many communities implement, which means that they have to build, say, 1 foot above the crown of the road. They may already be above or at the elevation that these new maps are coming in at. So it's not like I'm saying we should panic every time you see a new map coming in, but I am suggesting that we disseminate information as professionals in our business and try to get the word out. These articles that are coming out are I hate to say it, they're a little sensational. That's what I guess drives subscriptions, and unfortunately, and I'm sure they're all accurate, the remapping. But again, we need to, as professionals, make sure that we are on our game and be able to indicate just exactly what's the best route for these folks to go. And of course, part of the Bigger Waters in the HIFA Act was an advocate's office, and you can look that up. The flood insurance advocate office. Look it up on the FEMA website, and they're there to answer questions that you may not be able to answer if we're not able to help you. So, what is the CRS initiative? Well, our first goal was to look at the communities that are not participating in the CRS. We've got well over 200 that are not participating, so we're going to try to assist them and secure their participation. If you're a community not participating, then you know what that means. That means there's a CAV, a community assessment visit. And that's something that we're working on with FEMA. We're going to initiate a pilot program. It's not going to be the kind of CAV that you may be thinking. It's not going to be something where someone's coming in and going to look at old skeletons in the closet. We proposed a pilot program through Steve Martin, our state NFIP coordinator, with Brian Kuhn's help, to look forward. We're going to look forward. We're not going to look back at skeletons. Every community has skeletons in the closet. But what we want to do is we want to say, look, if you've got new administration, if you've got new procedures, new steps in place that will prevent those old skeletons from happening again, new staff, exactly. If you've got that in place and you're willing to say, hey, I'm going to look out for our substantial damage or substantial improvement, we're going to secure elevation certificates, we're going to meet some other prerequisites that we're going to roll out here real soon through our external affairs and PIO staff, you can get into CRS much easier than what you may have thought. So that is our goal, is to try to enlist every community that is participating in NFIP, that is eligible, and meets these new prerequisites of this pilot program. And I'll tell you, we are getting calls from all over the country saying, hey, I want in on this pilot program. And FEMA is saying, look, we're going to pilot in Florida, let's see how it goes, and we're going to roll it out. So we're anxious to get as many communities in the CRS as possible with this new CAV pilot program. And it's basically just some performance measures that you have to certify that you'll do as a community. We're also going to look and conduct workshops, something similar to this. We did a survey where the #1 requested service by our initiative staff is one-on-one assistance. The second, believe it or not, was this type of workshop where we can speak to large groups, and what was surprising the most was the elected officials. The CRS community coordinators were indicating that they didn't feel like they were getting all the support, and that their elected officials and their county or city administrative officials were not totally aware of the time that it took, especially for some of these better class communities, the class 5s. The ranking is 1 to 10, 1's the best. And right now we have, effective May 1, we'll have 20 class 5s that are securing 25% discount off their flood insurance, and that's just tremendous. Matter of fact, there's 80 communities that are a 5 or a 6. So that's just tremendous. No other state comes close to the numbers that we have, so we're really glad of that. And I should put in a plug for the Insurance Services Office, who basically they're the contractor that FEMA uses to make these field visits. And I used to work for ISO, and we have come to an agreement where they're going to allow us to run this pilot program and get communities in at a Class 8 with very little effort. We're going to be able to document your effort either by phone or by a 3 or 4 hour visit once you're eligible and meet these performance measures and become eligible. So it's going to work out really great. We're also going to try to seek additional credit points. We've got a community I've been working with that it's going to be the first community in Florida that's going to actually obtain a Class 3. And that's going to come out in October of this year. Very excited about that community. It'll be the first one on this side of the Mississippi River. We've got 2 Class 4s in FEMA Region 4, which is the southeastern states. But this will be the first Class 3, and huge effort on their part. and a huge effort on our state staff to try to secure these credit points for them. But what's really exciting is to publicize the fact that you're in the CRS. Every community who earns CRS status gets a plaque, and that plaque is a very nice plaque. And I love making these plaque presentations. I was in Walton County a couple of, well, it's been a couple of months now, and I was able to stand before the board and those in attendance at the public meeting and share. In this particular county, they're saving over $900,000 a year by their Class 6 20% discount. That got a nice little round of applause, and that was a lot of hard work by the staff of Walton County. I put a plug out for those guys. They were doing a tremendous job, and the community development director read off their names, and it was just a great evening for just 15 or so minutes before they got back to the normal business. But it was a great opportunity to share and publicize the discounts, and those kind of numbers made a huge impact. In fact, the governor's office has indicated that they wanted to get in on some of this publicity and rolling out this information. So we're looking forward to even a greater publicity opportunities coming up in the future. So that's another opportunity we have. So along with the seeking additional credit points for the existing communities and liaison, we love to liaison with FEMA. We want to help you with FEMA and trying to better understand how we can get you into the CRS and know what's coming up. The planning opportunities, we want to do that, and I already talked about the publicity aspects of the CRS. So that's the CRS initiative. That's what we're going to do. That's what we've already started. We've probably got about, I think last count, 8 or 9 communities that are in the hopper, so to speak. They're working on some performance measures, and will be probably processed by October. We'll see some additional communities in the CRS. So we're looking forward to that. The next slide is going to have my contact information, and this, as William said, will be placed on the Florida League of Cities website. Probably I should have listed the websites beneath the phone number there. I apologize for that, but it is on a previous slide that William had, and you go to floridadisaster.org and you can search for the CRS and you'll find it. But I'll make that change, and it'll be on the website. Well, I know we have some questions. Do we want to entertain those questions and see what folks have? You've written in some questions. Let's see what do they say, William?
Yeah, well, let's go ahead and go to, we have 4 questions at this time, and what I'd like to do is I'll take all the easy questions, and I'll give the hard stuff to you, Danny. How's that work?
Yeah, we'll see how that works.
All right, good. The first question is from Brian. He's got a couple of questions in, several questions in, which were good questions. Will the slides be emailed to all the webinar attendees? Yes, we will do that. I'm understanding that that's no problem.
And or, of course, it's going to be on the Florida League website.
And it will be on the Florida League website, and Danny will also have information on his website at floridadisaster.org. The second question is, I encourage all insurance personnel to contact their local government's CRS coordinator so both of them can work together on this. I totally agree with that. It is a partnership, and we are, like I said, at the Florida League of Cities, we wanted to provide leadership on this issue, and we're definitely all about forming new partnerships, and would encourage local CRS communities to reach out to their insurance agents and have a dialogue. I think that's a great opportunity there.
You know, William, one of the goals that Director Kuhn had asked was that we work with realtors and insurance agents. So probably somewhere in the summer to later fall, we'll probably start looking at doing something to reach out. We have reached out, and in fact, the realtors have reached out to us. Something that just kind of is amazing when a realtor is out selling a property, and the unfortunate disclosure at this closing is this dreaded sheet that says, I have to buy a flood policy. What we want to encourage, and what is credited in the CRS, is if you announce that information prior to any kind of sitting down at the table and ready to sign the papers. And that's an element that is credited in the CRS. But what I have tried to do and what we have shown, and I even have had some realtors come back to me and say, look, I sell real estate in a community that's 100% floodplain, down to Collier County, some of the southwestern counties. It's not a secret, unless you're coming from some other state, that you're in the floodplain. But when you talk about a community that's a Class 5 or Class 6 that affords the resident a 25 or 20% discount, that's a selling point, and it has been received quite well. So I just throw that in as a comment.
Absolutely, and also, again, it's not that hard to do to have a PC these days, a laptop even at the desk where people come in for permits, and you have the GIS maps there with the flood zones listed. I mean, that's an easy fix, and you get points on your CRS application, so we can do those things. The next question, again from Brian, is this should be recorded and available for additional listening or downloading. Absolutely, Brian, and yes, it will be, and that is exactly what we wanted to see happen, so we appreciate the comment, and I think it's a great question. We have another question from Gail. She has a two-part question. The first part of the question is, we have no areas of special flood hazard in our town. Can we get certified without the points for dealing with the special flood hazard issues? I'm going to leave that question to Danny, and then there's a second question here. It's saying that I guess that they're at a level 6, the highest that will help their residents, requires a level 5 building code effectiveness grading certificate. Yeah. We have been told that it is almost impossible for us to do better than this because we don't have a full-time building department. Any alternatives? And yes, ma'am, I do have some suggestions for you on that, and I'm going to leave the first part of that to Danny. Go ahead.
Well, you know, one thing that I guess we didn't mention and probably should have included a slide, I was trying to make this as minimum as possible. The 25%, the 20%, and the increments of 5% that we talked about, we were really talking about those policies inside a special flood hazard area. However, there are discounts, 5 and up to 10% discount for policies outside the floodplain, those that are called standard X-zone policies. So you may not have any structures in the floodplain, or you may not have any special flood hazard area, period, in your community. That's not a bad thing. But there may still be, maybe you have, you're near a coastal area or a canal or a riverine area that someone may want just that security, and they may have a standard X-zone policy which can receive up to 5 and 10% credit, depending on the class that you come in at. So there is an option. There is a reason to get into CRS, even though you're not in the special flood hazard area. So yes to the first part of the question. I'm going to just touch on the building code effectiveness grading schedule, which is often called BSEGS. That's another program that's implemented by the Insurance Services Office, and there are a number of communities that have achieved well over a Class 6 of a BSEGS rating. Now, I'm not going to say that because you don't have a full-time building official is hindering you, because there are a number of reasons that, just like there's 19 activities. There's a number of activities in the BSEGS, from training to record keeping. So I would talk with your ISO staff working on that, and let them certify or give you some advice on how to achieve a better BSEGS classification. Another note on this, there was some legislation proposed this year about doing away with the BSEGS classification. There are states all over the country where, in fact, Florida is the only state that actually has a surcharge if your community will not allow ISO to come in and conduct a BSEGS classification or evaluation. There are a ton of, well, not a ton, there are many different programs and evaluation or different tools that evaluate what building code you're enforcing. But the BSEGS classification that ISO developed with FEMA and with several large insurance companies is the only one that looks at how it's being enforced and is it being enforced, not just what building code you have adopted. You can adopt all the codes you want to, but are you enforcing them is the key. So I want to put a plug in for maintaining this building code. Without the BSEGS program, we would lose over 85 of our 216 communities from the CRS. So it's really important that we gain some momentum on supporting the BSEGS classification. Now, as far as having your building official, full-time building official, I'm not going to be able to answer that for you, but the Insurance Services Office can. And if you will contact me, I'll put you in with Ralph Dorio, the person who actually runs the BSEGS program for ISO, unless William has another alternative.
Well, yeah, I mean, I don't think that's necessarily an impediment because, again, back to your point, is the code being enforced? Well,
yes.
If it is, someone's doing it. The county may be doing it, and if you could show that you have a contractual relationship with the county to enforce these regulations, and they are indeed enforced, then I don't see why you couldn't get credit. So there may be other ways to skin that cat, so to speak, and if you give Danny or I a call, I'm sure we'll be glad to coach you through that. And I am aware of other alternatives out there. There are companies that are beginning to start up now that could come in and provide services. So there are more than one way to think about or approach the issue. And as far as your first point about not having parkland in the special flood hazard area, every circumstance is different, so I'm not going to categorically answer this. But again, if it's open space that's preserved, that it's not being built in, and say it may not be in the special flood hazard area, but it's in the drainage basin, well, then I think you have a discussion to maybe have with someone in the CRS scoring process, and perhaps that's dialogue y'all could take on.
Yeah, exactly.
All right, those are all the questions we have on the screen at the moment. Are there other questions that you have out there that you can type in, and we'll be happy to respond?
I do appreciate those of you who did write in.
And we'll give you a minute because if you're like me, you're a slow typer.
It might be important just to remind folks that the CRS classifications go into effect every May of each year and every October of each year. So in May, if you have access to the flood insurance manual, you'll look for some new communities. So you'll look at our website and you'll find the list, and you can look and see who has been added to the group.
Okay. Any additional questions at this point? Well, again, if not, that's fine. We appreciate everyone attending. Our contact information will be listed. We'll get this information out to everyone. And again, thank you so much for taking time out of your day to participate with us. And we look forward to seeing you in Tampa, or at least if you can spread the word that an additional class is coming up in Tampa, we'll certainly make it worth your while.
Thank you very much.
Thank you.